Hey everyone, Andy Moss here with your look at the weekly charts. It is Sunday, August the 2nd, getting ready to start a new month, and we've been watching this consolidating price action a little bit sleepy here for the last few weeks. And this week, the market woke up and gave us something to pay a little more attention to. And to go down to the roadmap chart just for a moment, what we've been seeing for the past several weeks is a series of lower lows and lower highs below a declining 5-day moving average. This is the S&P futures up here in the upper left, NASDAQ futures as well, and the Russell and the Dow have been following a similar process there. So now, Wednesday and Thursday, we had a somewhat dramatic drop followed by a rebound, and now we have a series of higher highs and higher lows above a rising 5-day moving average on the S&P 500. NASDAQ futures flattening out here, not rising yet on the 5-day. So a bit of an evolution here. And what we've been watching, and here's SPY. I've covered this trend line and talked about how this is just a notation, just a visual reference point there on the price action. We were stuck below for several weeks. We broke out. We didn't get any follow through, and we've been retesting that line for several weeks. The last 2 weeks specifically, we were looking for follow through, which did not materialize. On the SPX version, maybe you like this notation, this trend line better, which is potentially a bit of a double top pattern here, but we want to see a breakout over about 7,600 to really get follow through signal there. But what you notice this week is the formation of this hammer candle. And let's move now to the Qs where we can see this more dramatically. This was the recipient of most of the selling pressure out of the four major indices. We had a long excursion down here well below this anchored VWAP off the March 30 low through this little support zone here and recovery back up to close it almost where it opened the week. We're still below the declining 4 and 10 week moving averages, but RSI is still above the 50% level. So that is a positive indication there. And what this tells us is that buyers stepped in where it mattered. Things finally got washed out enough to bring in meaningful buying pressure. Notice this candle from a few weeks ago, how it's almost the opposite. We had a trip higher that got sold down, and then some little chop and some follow through to the downside. Now we've got buyers stepping in at a washed out level, and well, washed out is not a technical term, but it was down pretty sharply and pretty quickly. We've now moved about 11 or 12% from highs to lows on the Qs, and we've got this hammer candle here, which is evidence that the buyers stepped in. Now, what we want to see is confirmation. Can they confirm this hammer with action that starts and opens the week later this evening above this level and goes on to possibly test these moving averages? Maybe it tests some recent highs. These will be the areas we'll be watching: 730, 735, 750, so on in the Qs. If it wants to continue rising, this hammer doesn't mean that price has to do anything in particular. It sure doesn't call a bottom by itself, but we can watch and see what develops. The Dow index still consolidating here. It did finish the week back above the moving averages, which is encouraging, but we want to see new highs on the Dow and IWM. The Russell 2000 is a little bit of a longer, but still very tight consolidation pattern. And the difference is it did finish a second week below the moving averages. This is the 4 and the 10 week here, but it's still holding above this extension level, which goes back to this move from the November 2024 highs down to the April 2025 lows. So that's what we're watching on IWM. Bitcoin could not get and stay above the 65,500 level. Solid rejection here from the declining moving average and back down below the 4-week moving average as well. Still watching 60,000 as a big round number for potential support if it wants to go down there again. And in the meantime, the dollar reversed pretty hard Lots of progress made over on these candles, and then several weeks of consolidation only to go back down in the shaded area, which is really not a surprise. It looked like a breakout, but we've noted many times how this price level, this range has been so sticky. The price keeps coming back to it over and over again, and so far that hasn't changed. So we can see what develops on the dollar in the week ahead. And while all that was going on, volatility still not getting very exciting. It had a bit of a rise here in the middle of the week and finished the week on the lows as stock prices started coming back up. Moving overseas quickly, the ACWX, this is the all cap world index without the US, another hammer shaped candle right in the support resistance area between the shorter term moving averages. So holding up just fine, bounced off of this VWAP again, but no directional resolution. But still, the odds are in favor of continued move higher. China added to the recent run, got above this 34.84 level and on up, nearly testing the declining 40-week moving average. So we've got some improvement there in Chinese stocks. And looking now at bonds, this was a prominent storyline in the news cycle this week as bonds continue to weaken, moving lower and putting in new recent lows on the aggregate bond index there. Here's the TLT 20-year Treasury bonds breaking this level, which is the low from back in October of 2023. And the real impact or supposed impact from this is in the interest yield as we see the 30-year Treasury bond yields breaking out to levels not seen for quite some time. This consolidation pattern has been building for several years now. We've had several tests up to this 515, 520 area. And so far, that has always been a lid until this week. This is a constant, continuous run off of the support level down here and moving now to new highs. So we want to see what yields do. And looking at the 10-year yields, similar action, although not a breakout level yet. So yields will continue to be in focus for many, I'm sure. High yield bonds trading more like the bond market overall than the stock market this last several weeks, below this trend line here and not closing at a new low, but it did get down and breach this level. So we'll see what high yield does in the weeks ahead. Crude oil inside week above the VWAP from the low just before the breakout and still above the moving averages. Gold trying really hard to hold this support level that it's been hanging on to for the last several weeks, and the 4-week trying to flatten out here. So maybe gold can hold this level and start rising a little bit, but so far it is in a downtrend or a pullback in this overall uptrend. And now something that was a bit interesting this week is while the cap weighted indices were struggling a bit early in the week, equal weight indices were making new highs. This is the RSP, the equal weight S&P 500, and we actually have a new all-time closing high here on the equal weight index, 215.01, just above this week's closing high. This was the week of June 29th, which was closed at 214.91. So equal weight indices holding up very well there on the S&P. The NASDAQ was closing back above the moving averages, and you can see it didn't dip nearly as far and gets a bit more of a bounce here on the strong weekly action. Looking at some of our specific sectors or areas of the market as a measure of potential indicators of risk on or risk off behavior, here's the IWF growth portion of the Russell 1000 with, similar to the Qs, a strong hammer here right above the 40-week moving average, but still below the 4 and 10-week. And value continues to smoothly climb the rising 4-week moving average, new highs there on value. And then here is the consumer discretionary. Big rebound, although it's an inside week, it repaired nearly all of this damage from last week's persistent selling And in the meantime, consumer staples, which were off to a really big start, pulled back in and closed in line here, very close to the moving average. So now, as we do look at them relative to one another, growth versus value, we're starting to see this shift, potentially a reversal area back in favor of growth, which could indicate that traders and asset managers are starting to position back in a more risk on stance. Again, we need to see confirmation that that is the move, not just a short term reversal. And in consumer discretionary versus consumer staples, holding this support level once again, and with a strong shift for the week back towards discretionary. We still need to see a move above the moving averages, maybe one that goes on and eventually takes out these recent highs to put that firmly back in an uptrend. Working on down the list, semiconductor index trying to hold on, and a bit of recovery here is for the second half of the week. Biotech's still holding a rising 10-week moving average, and this is consolidation and pullback continues after this stellar breakout move. Software, which really looked nasty and kind of left for dead last week, got what could be a pretty meaningful bounce here this week. It held this area back above the moving averages, not out of the woods yet. This is just really wide, erratic action, but at least it held the area and didn't break down further, and that's due to some earnings names, some good results out of several different companies, Microsoft most notably. Looking at the Mag 7s, we still have this consolidation pattern here with price getting tighter and tighter. No directional resolution here yet. And just because we put these lines on the chart doesn't mean that we have to get a big directional resolution. But as price gets tighter and tighter, we should see something give way in the next couple of weeks. XLF continues to march higher. It's the first week with all of the action above this weekly high back in the beginning of the year. Energy XLE continues its breakout, though not running away. It did hold up in the basically the upper half of last week's range and still above the moving averages there. Now let's take a look at some breadth and participation before we move into the Mag 7 names individually. We've got the percentage of S&P 500 stocks above a 50-day moving average. A little bit of a downtick here this week, but still in the 60s, well above the 50% level there and holding up just fine. And in the meantime, the percentage above a 200-day moving average is flat, but a little bit of an uptick. So we've still got a lot of uptrends across those 500 stocks, or 504 stocks, whatever the number is now. And that just shows us that the market is still participating in an overall basis. And that is supported by the new highs that we saw on the equal weight version of the S&P 500. So I want to take another look at the bullish percents indices this week because there was some potentially meaningful development there. Not necessarily in the SPX. It still is kind of drifting higher or floating higher above the 50% level and not in an extreme range. Similar action here with the NYSE as it's about 57 here to close the week. And we see this action back and forth right around halfway. But last week, we noticed that the NASDAQ bullish percent was getting close to the 30 level. And much like RSI or many other oscillating indicators, what I was explaining is that the bullish percent indices seem to have the most value when they get to relatively extreme levels, down near 30 or up above 70. And that's what we saw last week. It was pretty washed out. And that tells us that most of the stocks in the NASDAQ 100 were on a point and figure sell signal. And what happens when that is the case, when everything starts to get sold down so much, what's left to sell? And it is an indicator or kind of an alarm bell to be on the lookout for potential reversal. And that's what we saw this week with the big hammer candle that formed on the Qs. We saw a corresponding move, and here's that hammer once again. With that, we saw the corresponding move in the bullish percent index. So lots of stocks got bought up. They got back on point and figure buy signals. And that just tells us that there is participation across the broad index there, or at least more broadly than it was in previous weeks. So now looking at some of the Mag 7 names individually, Apple had earnings this week, and I don't know the results of the report, but the potential problem leading into this was that Apple had run so far, so steadily over the coming weeks that how could they possibly impress stockholders at this point? And sure enough, we saw a bit of a pause here in the previous week as folks prepared for the coming announcement. And when the earnings results came out, it was a sell the news event, which is not uncommon there. Now, it did hold the rising 10-week moving average. It's still within the upper half of this recent move. So it's not broken down. This is just a pullback in this uptrend. But those are the types of earnings scenarios that we have to be on the lookout for. It's not just about the report. It's about what has the stock done and how are people positioned heading into the report. Amazon got a very nice move after their earnings report, and not quite to new highs, but pretty close. And this is just a very strong move. We need to see action in the coming week. Stick around. We need to see the buyers stay engaged and hold price up in either at least the upper third of this large candle, or maybe they keep going and it has a week two that takes it even higher up into the 280s or beyond. Google, a decent move, but still within this area of compression. We still have these lower highs coming down through here. It's still not through this line, but it's still holding this support down on this line, and we need to see a break in one direction or another. The strong move after the report this past week would indicate that if it can get and stay above this declining VWAP and moving average here, that maybe we get a breakout and a move higher for Google. Meta, continuation lower after getting stuffed at this trend line for the last several weeks. Meta still has plenty of work to do. It's below all the moving averages and not of much interest to the buyers there. Microsoft, we mentioned a few minutes ago with the improvements in the software sector overall, just a really strong move from Microsoft after their report. Stock up nearly 20% or so, and right back to this area that we saw several weeks ago. So just much like Amazon, what the Microsoft bulls will want to see is action that either continues higher and into some new area here, or at least hold up in the upper reaches of this big weekly range after earnings. And if it pulls back, probably want to see it hold the mid 440s, mid to low 440s here if it's going to have a more lasting change and get back into an uptrend. NVIDIA still stuck and really going nowhere. We've got flat moving averages. It did come down and glance off of the rising 40 week, but still not making new highs and has a lot to prove there if we're going to get another leg up in NVIDIA. And finally, Tesla back down and holding very close to this 50% retracement level, which it first visited last week after their earnings report or leading into the report there. So there's the Mag 7 names. And so we've got bullish action taking place. We've got a lot of rebound and repair, but we don't have an overall bullish resolution yet. The buyers finally showed up, but not everywhere, but they did show up at some levels we expect and in some pretty meaningful places. We've got that hammer candle on the Qs and several others. We've got some meaningful anchored VWAPs holding. We've got the improvement in the bullish percent index there on the Qs. And we had a fund liquidation event this week with the Situational Awareness Fund That was the forced selling event that really took prices lower there on Wednesday and into Thursday. And this is if you think about the hammer on the weekly chart, this is that long lower shadow right here. We got a move down very far into the lower 660s, and then an open and a climb the following day, and then a close on Friday back above this VWAP. So there's the daily action that all combines to make this weekly candle there on the NASDAQ. And that tells us that now the burden shifts to the buyers. Can they follow through? Once again, we're looking for follow through, just in a little different format. For the SPY, it was a move that took it back above the previous week's close or maybe into new highs. For the Qs, we need to see the hammer get confirmation. The hammer is the evidence. It's not a signal in itself. We need to see that confirmation and some indication that buying pressure can stick around. And perhaps that liquidation event is the catalyst that can allow that buying pressure to show up. Forced selling often creates these temporary distortions because you've got someone in a position where they have to sell regardless of the price. And once all that supply clears up, the markets can recover pretty quickly. And that's exactly what we saw. So now, with that out of the way, can we get some higher action? No matter the action, be focused on the same thing, following our process. Our job is not whether to predict whether that was the bottom. The job is to recognize that conditions may be changing. We keep identifying these important levels and let price tell us whether the buyers can build on this week's reversal. So how do we do that? We look at the smaller time frames. We zoom in and consider what's going on. We're looking for higher highs and higher lows above a rising 5-day moving average. The S&P is already there. Can the NASDAQ, the Russell, and the Dow follow suit? If we look at these on a daily time frame, this is what we're looking for. So last week was very busy. We had FOMC, we had major earnings reports, we had that liquidation event and the fund in the news. This this coming week won't be nearly as busy, but we still have plenty of earnings reports and some economic data coming out. So I'll keep the charts coming. You guys know what to do. Watch the price action. Don't try to predict. Look for the evidence and listen to the message of the market.